welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Run on the internet, and today we are going to be talking about, well, look, the editor set up the show notes for the week, so I got to give props to him because I didn't have time to get around to it, but he added some stuff, I think, just to get some rage bait out of me, because whatever, it is what it is. But I guess we're going to talk about a solo Bitcoin miner bagging 330K this week. In case you wanted to be encouraged to gamble, we're also going to be talking about Ergo producing over $100 million of Bitcoin in 2 months after a mining pivot. And we're going to be talking about some basically cryptography patents in a US court case that impacts Bitcoin miners. We're going to also talk about Bitcoin mining profitability for the month of May. And CleanSpark is ramping up to mine at least 9% more Bitcoin here in May as well. So that's going to be following up on that. And we'll be talking about the latest Bitcoin analysis price predictions, as well as the hash rate index for the week. And then moving on from there, we have a gaming topic I want to talk about. And then we're going to talk about, it's important, and we'll get into it because a lot of stuff is changing in our world lately surrounding basically, rights to privacy and so on. And obviously we've had a lot of that invaded by corporations, and it looks like that's also now going to be coming from the government. Funny enough, coming from the Republicans, with the implementation of the Palantir system, which has already been, they already use that database and a lot of that machine learning in the law enforcement space with something called Gotham. So we're going to cover that as well, so you guys can get up to date on that. That's all going to be revolving around, of course, the Trump and Musk argument that's been going on. I'm sure everybody is up to date on that, but I'll give you guys my 2 cents on it, if it even matters, right? But my 2 cents might be at least funny to you, so we'll go over it. We're going to be talking about a new coin and doing a review of a new coin called Vulkan, V-U-L-K-A-N, like the lower level API rendition of OpenGL, I guess. And then we're going to be talking or doing a video reaction to Rapid Mining's GPU, CPU, and FPGA mining is all back. June 2025 profits, and taking a look at that. But before we get into that, I want to thank everybody that's here. Eugene, thanks for stopping by. Nakudo, thanks for being here. Sasquatch, good to see you. Maskless Ninja, Tepper, Chuck Danger, Team JFK, and Neo, I guess, or Ne1. And I know you've been here a lot, and I still don't know how to pronounce your name, so apologies for that. AFC, we got Crypto Mikel in the chat. Make sure you guys go follow him. And I guess he's saying that the Twitch is broken. Why would Twitch stream be broken? That doesn't make any sense. Let me check. Stream went offline. Weird. Is the kick one down? I have no control over the Twitch. I wonder if we got banned or something. Maybe we got banned on Twitch. I don't know what's going on Twitch. I don't know why it's not working. So it is what it is. I'll just tell everybody on Twitch to head on over to kick.com/blindrun. If that's the type of stream you want to view, we're on kick.com. We're also on YouTube, and we are on Twitter, and all of that is up. So we will have to review, I guess, the Twitch issue at a later time, but thanks for the heads up, Mikel. It is what it is. I'm just joking. I doubt we're banned. I don't know why Twitch is broken. Tepper says he sees us over there. I actually refreshed and I don't see the stream. So I don't know. I have no idea what's going on there. But let's go ahead and hop into it. The biggest news of the week that I'm sure every single KOL within the crypto mining space is talking to you about and giving you affiliate links over is going to be the solo Bitcoin mining miner that bagged 330K block reward despite record difficulty. This, I guess, on June 5th. And so this article should be pretty sweet and short. Of course, it was on solo.ckpool, and ckpool's kind of been the go-to for any solo miners. You can build your own node. It is, to be fair, building your own Bitcoin node is a little bit more difficult than, at least in my opinion, a little bit more difficult to figure out from a mining perspective than, say, something like a Caspa node. So I do understand why people don't necessarily jump right into it. And because Bitcoin's been out for so long, when you go to like Google it and figure out like how to do it, at least like in my particular situation, I've found it pretty difficult to find specific guides for mining to a solo node. The best one that I recently took a look at was actually covering, I believe it was mining with solar on your own node for some reason. And then there was one that was pretty good that was mining with satellites. And it covered doing your own node. So you could pull the guide of mining to your own node out of one of those. But I do understand that it's a little bit more difficult to find clearly written guides. It's probably something I need to do, to be honest, because that is kind of the thing I'm known for. And I apologize for slacking on not getting as many guides out as I have in the past. It's just I'm trying to keep the content up that I can keep going while I work. So it is what it is. But back to the topic, a solo Bitcoin miner successfully mined block 899,826, earning a reward worth $330,386 US, a rare feat amid record high network difficulty. According to mempool.space data, the block was confirmed at 3:48 a.m. UTC on June 5th and included 3,680 transactions. The miner operating under the Solo CK pool collected a subsidy of 3.125 Bitcoin plus an additional 0.026 Bitcoin in fees. The average fee per transaction in block 899,826 was around 29 cents, with a medium fee rate of around 2 Satoshis per virtual byte, suggesting relatively light network congestion at the time. I mean, I'm just going to go back and say, like, one of the biggest issues with Bitcoin right now and crypto as a whole that we're running into is that it's not being utilized to the extent of being able to make up for the drastically reducing rewards and the amount of crypto in circulation. I think the two biggest glaring projects right now with this problem in the top 100 is going to be Bitcoin itself and Caspa. We could talk about the other ones like proof of stakes and so on. Like obviously Ethereum is looking really, really light on amount of transactions. Solana is obviously looking the best out of all of them from a proof of stake perspective. But those don't have near the impact, or I should say, those reward systems and the fees don't have as much of an impact on the actual price of the cryptocurrency because it doesn't have that intrinsic value that's derived from energy production that proof of work has, at least to that extent, because obviously costs are very low for virtual private servers just running a couple cores and keeping a node up. And so I think, like, when they say things like, you know, it was a pretty light network congestion, it's like, well, it's been that way for a long time, unfortunately, right? In a June 5th post on X, Con Calivas, a software engineer and administrator of the solo mining pool CK pool, said the miner who won the Bitcoin block recently ramped up their hash rate to 259 petahashes per second. So when we're talking about a solo miner here, and this is really important, that's a lot of petahashes. You know, when we're talking about, in particular, you know, one of these bid axes or something like that, we're talking in the gigahash range. Just now you're cracking, you know, like terahashes here recently. petahashes is like the next step. And that's like going from like, in money terms, like going from millions to billions, right? And going from millions to billions is very difficult. Going from terahashes to petahashes, very difficult. So this isn't like they were sitting there with a solo CK, or sorry, it's on solo CK pool. It's not like they were mining to that with like a single bit axe and they won. So spending, $400 to $1,000 on one of those, gigahash to terahash models isn't going to compete with 259 petahashes, right? For reference, right? I think all of mine together, I'm at like 10 petahashes, right? And that's like S19 Pros, S19s, that sort of thing. I'm barely getting to 10 petahashes. So, I mean, we're really probably like in S19 terms, we're talking about how many, it's a ton, right? Thousands, which I assume they're probably running, maybe S21s, something along those lines. But that's a lot of petahashes. So it's not like, that is significantly reducing, time to find. And for anybody that's not familiar with that, mining has, so depending on the difficulty of the network and the amount of hash rate you have will determine time to find a block, which is how long it'll take you to find a block. And depending on your time to find, you would basically determine if you're going to solo mine or if you are going to mine to a pool. Combining your hash rate on a pool will lower the time to find, and then you split that reward with everybody on the pool, right? And so when you're solo, if you want to look at going to solo mining, you typically look up like what your time to find would be. Make sure that time to find would be, basically ideally less than the time it takes to get to your next power bill, right? Would probably be the best way to put it, right? So if you're on like a 30-day or 28-day power payment cycle, then you would basically say, if my time to find is lower than 28 days, it's probably okay for me to take the risk to go ahead and put my hash rate solo so that, I can end up being there. Point being, though, at the end of the day, this wasn't a lottery miner, for lack of a better term. Like I could call out like individual ones, like I've been saying BitX just because that's the most popular one, but it isn't one of those, right? This is a massive farm putting all of their power onto solo to hit a block. And that's going to cost a lot of money in power as well, right? And so these guys, like that $330,000, depending on what they're paying for power, isn't going to look like $330,000 either that you would win off of a lottery miner that's costing you a few bucks a month to run, right? So it's a different game that's being played here, and I think that's important to note. Based on the fact that the only one worker mining device was connected, he said this was almost certainly a rental hash rate. So what they're talking about here, once again, we'll go through this for everybody not in the know, which I know a lot of you on the stream are in the know, but you can rent hash rate as well on platforms. NiceHash is probably the most famous one. There's mining rig rentals and a few others, right? So what people do is they'll go rent hash rate, point it towards the network, and then mine. It sounds like this was a lottery where somebody rented a bunch of hash rate on NiceHash or the likes and pointed it. My argument would be here, you can name all of your workers the same thing and point it at the pool. So, for example, like if you have 50 workers at one site and you just want to know what the hash rate for that site is on average, you could just name it to that site saying, this one is in Oklahoma, and it just, it shows up on the pool as one worker, Oklahoma. And so I don't necessarily believe that it was rented hash rate unless, right? So the way you would determine that, or the way I would determine that, is I would look at how long that hash rate stayed on, right? So if that continuous hash rate has had a long period of time, I would be less less likely to say that it was rented hash rate and just say they named all their workers the same thing and they just deployed, a single flight sheet to do so. So I don't know, but I couldn't say for sure that it's rented. He said that the account had been mining on CK Pool, but normally it had much lower hash rate. Therefore, the big hash rate was probably a short-term rental used to take a shot at scoring a block reward. On June 1st, Bitcoin's mining difficulty hit a new all-time high of 126.98 trillion, according to data from blockchain.com. The surge in difficulty reflects rising competition among miners and increasing network security. The mining difficulty is adjusted every 2016 blocks and is driven by the network hash rate, which means the total computational power dedicated to securing the network. With current difficulty levels, the chances of individual miners successfully solving a block are minuscule. Of course, with that, it really comes down to the amount of hash rate, right? So I guess that would be an interesting one. So let's just do what to mine real quick. And let's do ASICs. And so let's make sure I get this right. Petahash to gigahash. Calculator. Oop, that didn't do it. No. Is this one a good one? I forgot. I think this one's a good one. Yeah. So let's say 259 petahash, that's 259,000 terahash, which I should be able to do in my head these days, but whatever, it doesn't matter. So on a daily basis, so this is how you can find time to find, right? So for Bitcoin, revenue in 24 hours would be 0.12. So you would basically multiply. Let's do calculator. We do 1 times 0.12. Is that right? Did I do that right? No. It would be about 10, right? So the divisible by. It's about 10 days, right? So 8 days, right? So usually I do 100 divided by 12. So 8.3 days was the time to find. So with that amount of hash rate, they only had to keep on the network for 8.3 days to find a block. So that time to find is really, really low. That's not as big of a deal as people would think it was, right? So, and thanks for the confirmation, Papa, over there. Yeah. So it's not minuscule with that amount of hash rate. So a lot of these, you got to be careful because a lot of these articles are misleading. And the reporting on it's misleading as well. And I think that, unfortunately, a portion of that is intentional to, basically push the affiliate links for the lottery miners. This isn't a lottery miner situation. This isn't a single, bidax running on the network. That's not the particular case here. It is not a minuscule chance when you have over 200 petahash on the network to find a block. And all of this is very misleading. And I do think that's because of the business model around affiliate links. I do think that it is kind of misleading intentionally to get people to think, oh, I could go buy a bidax. Maybe I could be the guy that makes $300,000. That's not the case. That's not what is happening here. Now, has that happened in the past? Yes, but it is a low rate. And so, I'm not happy with this whole, it's a minuscule chance. Look, time to find was 8 days. It was inevitable that they were going to find a block within 8 days, provided they remained at the same hash rate for that given time, right? I think the biggest concern that I have reading that entire article, though, is going to be the lack of fees within the block, right? So Kango, I guess I need to figure out how to pronounce this. Let's go to Google. And we'll do this pronunciation. How to pronounce, that's Congo. I know how to pronounce Congo. I want Kango. Let's see if I got it right.
Kanga.
Kanga. Okay.
Kango.
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 Kango. I'm going to go with Kango. Okay.
Kanga.
Even though the 5 out of 5 says Kanga. Anyways. Kanga mined or 954.5 Bitcoin worth more than $100 million in April and May following its full pivot to Bitcoin mining and sale of its legacy operations. Bitcoin mining company Kango produced nearly $100.5 million worth of Bitcoin in the 2 months following its full pivot to crypto mining, the company announced on June 3rd. It mined 954.5 Bitcoin after going all in on mining. Of the total haul, 470 Bitcoin were mined in April and 484 Bitcoin in May. This follows Kango agreeing to sell its legacy China operations to an entity associated with Bitmain in a bid to focus solely on Bitcoin mining in early April. Earlier in May, Kango reported that it mined 1,541 Bitcoin in the first quarter of 2025, worth around 162 million at the time of publication. So Kango said it operated at an average hash rate of nearly 30 exahashes per second in April and May. In Bitcoin mining, a hash rate refers to the number of cryptographic hashes a miner can compute per second. We're all aware of that. Guessing and checking is a good description for the computing intensive operation that miners are involved in. They calculate the hash of a block they want to create while altering a small amount of data until they find a hash that is suitable to confirm a block in exchange for newly minted Bitcoin. The higher the hash rate, the greater the chance of solving a block, and we all just discussed that at length in the previous article. So they separately announced that its two co-founders signed a deal to sell $10 million or 10 million of their high vote Class B shares, to Enduring Wealth Capital for $70 million US. The deal is still pending shareholder approval. The company will preserve 20 votes per share status of those shares. The founders will also convert all remaining Class B stock to 1 vote Class A stock. After the deal closes, Enduring Wealth Capital will gain voting control with more than half of the total votes, or less than 37% if Kango issues share settled mining rig stock. So still, the firm will only hold under 5% of the economic equity. Now, I believe, wasn't this, I wanted to go find this. I can't get, they had a shift recently. And I don't know if because this pivot happened. So let's cover that. I wanted to figure out what the pivot was, right? Because what did they do before? Do you guys remember? Okay, so Kango operates 2 car trading platforms, including its U-Car platform for new and used car trading in China. And so it's a used car trading website in China. And it was called autokango.com for cross-border selling of used cars from China to other global markets. And so from that, they shifted into Bitcoin mining. And now they're going to be focusing solely on Bitcoin mining, which is pretty crazy. So there you go. So that's Kingo and where they started at. That's an interesting shift that they decided to move into. Obviously, this has been something that we've been seeing quite a bit. Most famously, MicroStrategy moving their business strategy straight up into just purchasing and holding Bitcoin. Similarly, last week we talked about GameStop doing the same. And I don't think that this is necessarily good for Bitcoin, because I think the nature of just purchasing and holding Bitcoin diminishes its intrinsic value. That's my argument. So I think that we're going to see more price suppression on Bitcoin. We're definitely going to see more price manipulation as larger companies are moving into it. So I think that that's important to note. Now, this one's an interesting one. So as Bitcoin miners, obviously we need to pay attention to like how, you know, the legal status surrounding cryptography is being approached. And this one's weird. So Bitcoin miners were sued over cryptography patents in a US court case. 1 second. I think the cat dander got me. So after buying 32,000 BlackBerry patents, the Maliki Innovation sued Bitcoin miners, Marathon Digital, and Core Scientific over alleged use of its intellectual property. Maliki Innovations, a firm that acquired tens of thousands of patents from BlackBerry in 2023, has sued major Bitcoin mining firms, Marathon Digital and Core Scientific, for using the elliptic curve cryptography employed by the Bitcoin blockchain, which it claims it owns. So this is really interesting. So effectively, I believe the BlackBerry, that cryptography was utilized for their email, or was that used for instant messaging? That might have been instant messaging, right? So for those that are not in the know, because maybe you're not old enough, BlackBerry was a phone company prior to smartphones, and its kind of selling point was like being a cellular phone for business people that had access to email. And then obviously there's text messages. Prior to BlackBerry, text messages were essentially went over the telecommunications lines and therefore were subject to telecommunication fees, basically like your phone line fees. And what BlackBerry figured out was kind of the original instant messaging or text messaging that allowed you to send the text message effectively over the data connection. So what we would call 5G now, back then, obviously not that, but a data connection. As opposed to a telecommunications connection, which meant that they bypassed the telecommunication fees on the network. And that meant that if you bought a BlackBerry, you could send as many text messages effectively as you wanted without being charged. Now, as a part of that, they also had cryptography included in there. And to be clear, Snake wants me to say it's called pin to pin. So thank you for that. So, but basic understanding as far as like what was going on there. Then they also employed obviously cryptography. And the claim is essentially that the people that own the rights to the patent that Bitcoin's cryptography is based off of, they're somehow suing Marathon Digital and Core Scientific. This will be a big case because obviously it's going to impact Bitcoin as a whole. I don't know that this holds any water, but let's look at what it says. So the case is against them, follows the acquisition of 32,000 non-core patents from the communications company and former phone maker BlackBerry in 2023. Quote, this case centers around groundbreaking innovations in elliptic curve cryptography that years later were recognized and selected by the designers of Bitcoin, the filing states. So this is crazy because Core Scientific and Marathon are just utilizing mining hardware that is communicating with this cryptographic method, but it's not like they created that, right? Or are utilizing it. I don't know. This is a weird one to me. So the lawsuit claims that the defendants are using ECC-based cryptographic methods covered under the Maliki held patents to support their Bitcoin mining operations. So Aaron Brogan, founder and managing attorney at Brogan Law, told Cointelegraph it is unlikely that such lawsuits will hit most individual Bitcoin users, even if the patents are found to be valid. Quote, pursuing individuals is trickier because they are often judgment proof, which is lawyer jargon for broke. Miners, on the other hand, are wealthy targets that are worthy of a lawsuit, Brogan said. These entities will always tend to attract lawsuits because they have money and the patent bar can try to take it from them. If the plaintiffs prevail, they will be able to recover up to 6 years of lost royalties. The sum to which that translates is not easy to calculate. Such cases often result in secondary trial, but you can reasonably assume it would be a large sum, and it might cause these defendants to enter bankruptcy, Brogan added. Brogan also noted that winning the case would establish a favorable precedent for Maliki to use in pursuing cases against other miners in the United States. This in turn could have disastrous consequences for Bitcoin. Quote, if they chose to pursue that strategy, it might undermine the security of the Bitcoin network, end quote, he said. Cayman Islands-based crypto lawyer Michael Bassina told Cointelegraph that it is unlikely to be what Maliki is going after. So-called patent trolls typically do not intend to have claims tested in court, but rather seek to extract a settlement, he noted. Still, Brogan argued that Maliki's is more likely to try to extract a fee until the patents expire rather than tank the entire industry. Nico Demchuk, head of legal at cryptocurrency compliance and forensics firm AMLBot, told Cointelegraph that it was unlikely. Maliki's claim appears not so strong if the asserted patents are expired or cover techniques that predate Bitcoin's ECC implementation. Even if some patents remain active, their scope is likely limited to specific implementation details, not the core ECC algorithms used in Bitcoin, Demchuk said. Still, nothing is certain, he added. To me, this sounds like a patent troll. It's really like, this is a lot of frustration. I have a ton of frustration with this, just our entire societal infrastructure, and how, to me, it seems like people doing, unethical, shady bullshit seem to make the most money in our society. And I think, like, becoming a middle-aged man, working really hard, going through all this for years and years, and just seeing, like, what I call, like, you have producers and parasites, right? You have people that produce and you have people that basically consume. Producers and consumers, to use the polite term, right? But like these parasitical consumers that just strip all of the value out of the working class. And this is just like one of those things that's extremely frustrating, that there doesn't, like, one, it's not like and I should say, like, obviously these are rich companies or whatever, so they're attacking the rich companies, but this kind of behavior where it's like, I haven't done anything. All I've done is buy this patent, and now I'm going to try to leverage it to get a settlement out of court to make money. It's just a scummy, crappy practice that pisses me off. And the fact that you're even able to do this, it's gross, dude. However, the outcome depends on the details. I don't think this will hold weight, though, to be clear. It's just the complete fact that somebody would even try to do this is frustrating to me, though. So he also highlighted that if infringement is shown, it still will not be over. He explained that a second issue will arise, being whether the miners, by using open source, are in fact infringing at all. This is not the first time that intellectual property related lawsuits have targeted Bitcoin. The Bitcoin.org website was able to re-upload a copy of the Bitcoin white paper a little over a year ago after it was taken down by Craig Wright's unsuccessful court attempt to prove he is Satoshi Nakamoto, the protocol's pseudonymous creator. Wright has worked hard to claim ownership of key parts of the technology behind Bitcoin. In the 2 years preceding 2019, he had filed 114 blockchain-related patents, who obviously, Craig Wright's rightfully so, earned the ire of the Bitcoin and wider crypto community from those kind of practices, right? So I think it is the way it is. Squirrel Master says, I seen 3M and won, but they made known faulty earplugs that they issued. I saw ads for that for forever, Squirrel. I'm glad you, I mean, obviously, if you're going to have, I mean, that's also not patent trolling, right? That's a lawsuit for damage done to your physical self that impacts your ability to work and earn a living, right? So at the end of the day, that's what it does. I think it's a little bit different there. And if you're selling known faulty stuff. 250,000 of the veterans won. Yeah, I had heard about that lawsuit. I think it was just Facebook ads, right? One of those like, if you were hurt by it, and then it's like, oh, okay, and you can sign up. Some of them are silly though. Like, have you guys been seeing the ads for the class action lawsuit against video games for video game addiction in your kids? This one's stupid. Sorry, tangent. So there is right now a class action lawsuit regarding video game addiction. Let me see if I can get this to come up, because this will be a fun one. So there, let me see if I can find this. I just want an article on it. Is there an article on it? I see the legal papers. Here's the lawsuit legal news. So this was updated January 2025. Video game has exploded in popularity ever since the home video game console was developed, and begging your mom to drive you to the arcade became a thing of the past. Now you could sit in your room and play until your heart was content. Unfortunately, video game developers have found more and more ways to get you to play longer and longer, leading to a new problem that is now breaching the surface: video game addiction. With the invention of in-game purchases, developers became even more inclined to get kids addicted. Good old dollar bills. Now, I will say, because there's a lot of things going through in the UK right now regarding in-game purchases. There's a lot of legal stuff going around with in-game purchases at this time. One being obviously the massive win with Epic over Apple for the 30% developer fee that was in place, and not allowing users to make purchases outside of the shop. And then obviously Fortnite recently got added back to iOS. And so on that side, it's like, okay, so we're winning there. We're stopping, this monopolistic behavior from Apple. But then the actual company Epic, in my humble opinion, and I could go on about all this stuff for days, but they have, because obviously my kids play Fortnite. I play Fortnite with them. They do have predatory monetization systems in the fact that they sell you the V-Bucks. And the V-Bucks are always sold for a price, but then the amount of V-Bucks you have to spend on an item always leaves you with leftover V-Bucks, and you can never clear out and have 0 V-Bucks. The UK is working on something right now where they're going to prevent that by forcing them to put a real money price on each item that's in the game, which means if I go to the game and my son says, hey, I want this skin, as opposed to paying, and the skin is $8, as opposed to going and buying $10 worth of V-Bucks and then buying the $8 skin and having $2 left over in these useless V-Bucks in-game currency, I can just buy the skin for $8 and have a zeroed out balance. I think that that should be put in place. I think there should be regulations surrounding that, because especially as kids don't understand that monetary trick that they're playing. And I think that that's really important. That being said, I think you can take things too far. This may be one of them, but video game addiction and the ramifications it's having on young people have led to a new legal frontier. So the lawsuit alleges that certain video game companies are playing a deliberate role in getting kids and teens addicted to gaming for the purpose of profits. The plaintiffs are claiming that these companies created and sold games that were meant to be addictive, and they especially wanted to hook young players. The lawsuit claims that new video games have stronger focus on player rewards, feedback loops, and small purchases players can make inside the games. They claim that these microtransactions get teens' brains hooked in a way that goes beyond just wanting to play and more into the realm of having to play. I think this is so obviously battle passes are in everything now, and I do think battle passes are Look, I'm old school, so everything that this article is talking about as far as microtransactions, battle passes, this like fear of missing out that they basically used to be predatory. I think all of that stuff is bad, right? And it's extremely frustrating. I also have, as a game, I'm an old school gamer, right? I've been playing for years and years. One of the best feelings ever is accomplishing something in a video game that gives you a reward that is visible to other players in the game, right? So you take World of Warcraft and the gear that you're wearing and the mount that you have in like vanilla World of Warcraft, like meant that you were really good at the game. And that was a good thing. I think that's a positive thing. It teaches you as an individual that if you stick with something and work for something, that you will get rewarded in kind. And then you will also receive the admiration of your peers. And this is a healthy social and economical interaction within video games, right? But what is shifted into now is that every skin, every cosmetic is paid for in cash and requires zero other than external work, right? So you have your external work that you do at your 9 to 5 that you can spend on that, but it requires that external work for you to do it, but no in-game work. So there's no driving factor. And I think this part's dangerous from the kid perspective because the kids don't have a real grasp on money or the concept of working for something to get something in return. And I think that microtransactions, cosmetic skins, and so on are not as appealing to me. Like if I see somebody with the latest skin in Fortnite, it means jack shit to me. I don't care, right? At all, because it doesn't mean anything. It doesn't mean the same as it did, back in the day in, like I said, like vanilla World of Warcraft, when you come across somebody with a badass mount or I forget the horse mount, right? The undead horse mount in vanilla. I draw too many blanks, but it just doesn't have the same meaning. So I agree with this article from the perspective of these practices are bad. So I would say that, right? But it says one child referred to as DG has faced real hardships, including emotional distress, diminished social interactions, loss of friends, and a range of disorders, including depression, attention deficit, hyperactive disorder, and oppositional defiant disorder. Now, all of these disorders, I don't want to, look, I'm not a medical professional. All I really know is that all of these disorders that are mentioned here are subjectively diagnosed. So you can't objectively diagnose these disorders necessarily. And by that, I mean, you can't take a blood test and say you have it. It's not like cancer where you can take a blood test or take a test, a biopsy, and say you have it, right? These are what I would call subjective disorders. And the problem with the subjective disorders in relation to an article like this is that then making that correlation, right? Like correlation is not causation and it's subjective. So you're basing, a subjective diagnosis and then trying to correlate that and claim causation from video games, when in fact, I would argue it's probably more upbringing. And this is just unfortunately a sign of the broader societal trend to claim victimhood over accepting accountability for the failures of yourself as a parent. And that is where I see that's my opinion of this lawsuit kind of summed up, which is I agree that these practices are bad, but as a parent, you should be able to take accountability for these practices and accountability for allowing your child to participate in them in a manner that was unhealthy, right? And that's the way I feel about it. So that's what's been going on with this lawsuit. So, right. And obviously we went off on a huge tangent, which was like, there are lawsuits in which a company creates a product that, with full knowing that will damage the physical health of an individual, right? In the case of earplugs sold to the army, and a lawsuit in that particular case is warranted, right? Because you were forced to use that product, and that product was also known to damage you, and therefore there should be some sort of legal ramification for that, financial compensation, etc. But then there's like the flip side where we are utilizing, subjective diagnoses to claim harm against a company for something that is voluntary to do. Does that make sense? So I don't agree with this from the perspective of being a lawsuit, but I do agree with them on the fact that I do think that there are poor practices going on in video games right now. I've been talking about this for a long time too, so it is like pretty close. I've been against like obviously I was around back when Oblivion released with the first horse armor. I was super against that. I hated it. And I've always disliked microtransactions, battle passes, etc. And then the hard part is too, I am hypocritical in the fact that I do participate in those to a certain extent. Because like there is that other side of me that's like, I don't need to be overtly negative about all of it, because then it kills the enjoyment across the board. And I do think that there is something to be said for like enjoying those outlets, whether it's video games, movies, etc., music and whatnot, and putting aside my cynicism to enjoy that with a child. Because I do think, like, I always go back to remembering being a kid. Do you guys remember like being a kid and how impactful like every little thing was, right? The first time you saw Star Wars, the first time you played Super Mario Brothers, the first time you did anything, right? The first time you got your feelings hurt and how impactful that was, right? Like all of the, like those first time experiences. And so I try to always look at things from the perspective of like I did when I was a child, and remember that like those things are exciting, right? Like the Marvel universes or playing Fortnite or all of that sort of thing. So it's like, it's always this constant battle of like, as you get older, you see the hypocrisies and the evil done in the world and the way these things are manipulated. But then you have to reel that back in and say, but you don't have to always harp on that, right? Because it is important to enjoy some of these things that we've been put on this earth to enjoy, right? And so I think it's a really interesting topic at the end of the day. But anyways, let's get back to crypto. We are seeing a ramp up in Bitcoin hash rate. I don't think we've crossed that 1 exahash again yet, but CleanSpark has bumped up 9% in May, boosting their hash rate and power capacity. CleanSpark's Bitcoin mining production rose more than 9% in May, bringing its treasury to 12,502 Bitcoin, double the amount it held at the same time last year. According to its monthly report, the company mined 9.4% more Bitcoin in May, producing 694 coins compared to 633 in April. CleanSpark also achieved 45.6 exahash rate from up from 42.4 in April, and expanded its contracted power capacity to 987 megawatts. May was a strong execution month for CleanSpark. Zach Bradford, CEO and president, said, "We increased our month-end hash rate to 45.6 exahash a second, up 7.5% sequentially, while improving average fleet efficiency. The company's Bitcoin treasury reached 12,502 Bitcoin in May, up 103% from past years. According to the company, the Bitcoin reserve expansion is linked to its mining operations and has not included any equity issuance since November of 2024. The company is the 6th largest public Bitcoin holder. It's a powerful validation of our infrastructure first strategy," Bradford said. On June 3rd, the day the company announced its May operational performance, CleanSpark shares were up 6.5% intraday. Over the past month, CleanSpark shares have risen 12.4% according to Google Finance, surpassing the Nasdaq's performance over the same period. CleanSpark's May hash rate has been on the rise in 2025. In May, the company sold 293 Bitcoin at an average price of $102,254 per coin, generating roughly $30 million in gross sales revenue. The company's earnings for the second quarter of 2024 shows $182 million revenue, up 62.5% from the prior year. Despite the growing revenue, CleanSpark posted a net loss of $139 million US. CleanSpark's output faces competition from other miners. Crypto miner Marathon Digital mined 950 Bitcoin in May compared to 705 in April, a rise of 34.8% for the month. On average, the company mined an additional 7.2 Bitcoin per day. Riot Platforms saw a smaller but still significant increase in production, mining 514 Bitcoin in May compared to 463 in April, representing an 11% jump in the period. Like CleanSpark, Marathon, and Riot Platforms have seen a boost in their share prices over the past few days. Obviously, the price of Bitcoin's going up as well. We did have a reel back, but we'll talk about that here in a second. I think it was a little intentional. And one of the things, I still don't understand the strategy of these large companies always holding a huge reserve in Bitcoin at what we would consider. So there's a debate right now if we've seen double top. I would say if we looked at the charts, here, let's go over this real quick, right? So if we look at the previous cycles for Bitcoin, like it is eerily similar, right? Like we have this kind of double top here. So if we look at 2021, if you guys see this, right? We had our first top at almost 60,000, right? Or a little above 60. Came back down and then it went back up to 60 again. And then it just kind of fell off, right? This looks exactly the same. Yes, it's not as high. So I guess you could say we're still early, but I don't think so. This looks like a double top because we went up, you know, to that 110,000 almost, and then we went to the 111. And now we're probably going to be coming on the way back down. I could be wrong, right? Like technically we have, from a timeline perspective, we have what, till October? So we have 4 more months. But if we're looking historically, which history, once again, I'll say doesn't always repeat, but it rhymes. Historically, we have this double top and then it comes back down. It looks like that now, right? It looks like we're not going to see like above 110,000. Now there is an article that is going to counter that. And so let's talk about that article, because analysts do predict 180K to 250K price top in 2025. I'm hard pressed to agree with this, but let's see what they have to say. So analysts from VanEck, Fundstrat, and Standard Chartered forecast a 2025 Bitcoin top between 180,000 and 250,000, citing institutional adoption and historical market cycles. Rising global liquidity and record spot Bitcoin ETF inflows have reinforced Bitcoin analysts' most bullish price projections. As Bitcoin continues its bull run and sets new highs, one of the most pressing questions among investors is how high can it really go? Timing a market top is a notoriously tricky task. Mastering the art of buying low and selling high demands both conviction and precision, especially when expectations for a new all-time high are mounting. In this phase of the cycle, old and new forecasts offer value. The former help contextualize the big picture, while the latter reflects today's evolving macro and market demands. And timing matters. If Bitcoin tops in 2025, should investors cash out entirely in fear of another brutal crypto winter, or will this time be different? This is one of those things where, like, Bitcoin hasn't really been different since its inception, right? On a timeline, from a timeline perspective, it's like every halving, then you have a little bit of a run, then it comes back down, then you have another, then you have the bear market, then you have the halving, then it goes up, and you have your run, and then it comes back down. And so if I'm looking at a timing perspective, well, technically, if we're looking specifically at the halving cycle, we're running out of gas from the halving cycle. And so if we're running out of gas from the halving cycle, and I say Bitcoin has never been different since its inception from the halving cycle, I'd have to say we're running out. Like, it looks like we're running to the end, right? Like, we're about to go off the cliff. That's what it looks like to me. That being said, there's always chance for things to be different. And we could also see it not collapse as hard this cycle just due to the fact that, macroeconomic factors may change that, right? Especially like with inflation and no tax on tips, maybe with this big, beautiful bill. We'll talk about that more later. But there are, maybe it's not as bad this time, I guess is what I would say. The first round of price targets emerged in late 2024 and early 2025 when Bitcoin broke above 90,000. Analysts from VanEck, Galaxy Digital, and Fundstrat began sharing forecasts in the $180,000 to $250,000 range, mainly citing historical price cycles, institutional adoption, and regulatory tailwinds as the primary catalysts. A fresh surge in spot Bitcoin ETF inflows and the growing realization that global liquidity is expanding are new reasons backing Bitcoin price estimates. As BitMEX co-founder Arthur Hayes noted, Bitcoin trades solely based on the market expectation for the future supply of fiat. And those expectations are soaring, but they're also the actual numbers are changing. And that's because over 94% of Bitcoin's been mined now. So the impact of miners on the price of Bitcoin and that supply coming in goes away. And so it really comes down to what the investors perceive the value is, right? So we have some forecasters. Tom Lee says 250,000 by end of 25. And this was in November of 24. I'd be the latest one. Let's see, April of 25. So we have Arthur Hayes, co-founder of BitMEX, says 250,000. Robert Kiyosaki, the author of the Rich Dad Poor Dad, says 180,000 to 200,000. And so we have these two that are the latest predictors as of April 2025. Interestingly, many of the predictions made at the end of 2024 remain unchanged in May of 2025. That's because the core assumptions, rising institutional demand, and pro-crypto regulatory signals have largely played out as expected. Newer macro developments have only reinforced the case. Liquidity has become the buzzword among analysts as it becomes increasingly clear that treasury yields remain stubbornly high and debt crisis is approaching. As a Bitcoin layer, author Nick Bhatia noted, Bitcoin rose with yields in 2021 on growth, stimulus, and reflation. It's rising yields again in 2025, but this time the context is different. It's not optimism driving this move, it's a search for neutrality. Most analysts agree that Bitcoin is firmly in a bull market. On-chain analyst Willy Woo recently pointed, that's a funny name, to the risk signal trending downward, suggesting buy-side liquidity continues to dominate the broader environment. The last time this occurred, between 2023 and 2024, Bitcoin gained over 200 100%. We're setting up for another solid run for the long time frame, Wu wrote. However, many Bitcoin market cycle based models anticipate a sharp correction in 2026, like February 2026, right? So on a timeline perspective, based on the halving, sell window is October of 25 to February 2026. And whatever hardware you don't sell at that time, because obviously I'm a miner, I care about selling hardware, not Bitcoin. Any hardware that you don't sell between that time, you're going to be stuck with until the next cycle, until the next halving, right? Just based off of the halving cycle and what happens, any hardware you don't sell between October 2025 and February 2026, you will be stuck with until 2028 at the least. Probably 2029, somewhere around there, right? 2028, end of 2028, something like that. So, that's how I see it. And unfortunately, like from a mining perspective, that hardware will become less and less useful, especially because we are seeing astronomical changes in the from a technological perspective on the Bitcoin mining hardware side of things, right? And they're ramping up new model after new model after new model. The turnover time is a lot faster from Bitmain and others. From a macro lens, this setup looks more fragile than ever indeed. As crypto analyst Stackholder noted, the Trump administration's attempt to lower 10-year yields using tariffs and spending cuts to signal fiscal discipline has fallen short. Now the U.S. deficit is set to rise, history repeating mounting debt, currency deflation, and global financial reset, as the analyst put it. There's still $7 trillion sitting in money market funds. All of that will eventually rush into something that can't be printed. And as the only credibly finite store of value asset which has consistently outperformed, Bitcoin will ultimately be the biggest winner. That capital, once unleashed, could fuel a much larger move than most 2025 predictions currently anticipate. That would be best case scenario. I'd love to see it, right? Joe Burnett of Unchained even posits a coming sovereign race to accumulate Bitcoin, possibly driving its price to 1 million by 2030. Kathy Wood's ARK Invest sees a wide band of potential between 500,000 and 2.4 million. These numbers may seem extreme, but in a world where the U.S. debt spiral shows no signs of slowing and where fiat stability is increasingly questioned, they are no longer easy to dismiss. As the case for Bitcoin continues to strengthen, the market may only be beginning to price in its role in the coming financial realignment. So obviously the narrative surrounding Bitcoin is that, Bitcoin's going to be your hedge against inflation. And because of the current economic status of the United States, which holds the US dollar, which is the world's reserve currency, and the overprinting that's going to be coming from the big, beautiful bill proposed by the Trump administration, passing the House, right? Is it in the Senate now? Something like that. And it has to go back to the House. Because of and then raising the debt ceiling again, because of all of that and the printing that will be induced because of that you would say, well, Bitcoin's going to go up from inflation. I've said this in the past a lot of times, right? I've said Bitcoin's a hedge against inflation. The more money we print, the higher the price of Bitcoin will go. It hasn't proven to be 100% true, right? So there's a point where I have to say, this is my blinders on Bitcoin perspective. Bitcoin's the answer. Fix the money, fix the world. It's a hedge against inflation. That's my Bitcoin blinders, right? But if I take the blinders off and I look at reality, that's not how Bitcoin hasn't soared because of inflation. It's only ever soared because of the halving cycle, which you could say is related to inflation to a certain extent, but not really, right? Not 100%, right? And it has followed some, it is still affected by traditional market makers in general too. So I don't think necessarily that it will be as impactful as people expect it to be. And here's the thing, whenever people start talking like this and and we start seeing these types of articles and these types of predictions, the last 2 cycles I've been in, whenever I start seeing these types of predictions, top is in. Right? Top is in at that point. When I start seeing these types of things, typically. Could I be wrong? Yeah, I could be. But when I look at, we'll go back to the chart if I can get it to refresh. When I look at this chart here and I see this, right here at the end, it looks like this. Maybe not, right? I'm just saying it looks like it. It could be this, right? It could be this right here. It could be this. Could be that right there. But like time, let's see, time between peaks, right? 4 and 11. So that's 7 months. 12 and 6, that's 7 months between tops. Right? Yeah. Timeline perspective and forming of the chart. I'm a dummy. I don't do a lot of trade analysis, right? I don't do it. I don't do TA. I'm a dummy. It is what it is. I'll back off, focus on the tech side, but I still have to think about this stuff. Obviously, at least a little bit. And then when you see like hopium predictions like this coming out in April, I just kind of go, hey man, like, probably want to start selling some of my equipment. That's how I feel, right? Trading Nichols disagrees. He says quantitative is strongly here. I think Bitcoin and gold will still race and beat highs. Maybe, but that's the kind of talk I heard last cycle too, right? About like, yeah, and I know you meant quantitative easing. But yeah, this feels like opium to me to a certain extent. But, it is what it is. Let's look at the hash rate index, though, for wrap up for June 2nd. So the TLDR is a mixed bag for this week. Bitcoin is down, hash rate and difficulty are up, fees are down, and hash price is down. So over the past week, miners collected a total of 3,369 Bitcoin and block rewards, equivalent to $359 million US. Transaction fees constituted 1.11% of block rewards, totaling 37 Bitcoin, equivalent to $4 million US. Bitcoin trended down throughout the past week, decreasing by 3.76%. It's back up though, I believe, right? So we're at 106. Yep. So I guess, what are we down? 1%, 1.5%, something like that. As of right now. US dollar hash price decreased by 8% from 57.3 petahash a day, petahash a second per day to a current 52.5, 5250 per petahash a second per day, which obviously is impacting a lot of people's mining farms. That also, network hash rate rose by 3.44%. I'm not too worried about this. It hasn't cracked, 1,000 exahash was 1 zettahash. Is that it? Right? Something like that. Again, which it has in the past. So we haven't seen that, and we're coming into the summer months. So for those of you that have not followed Bitcoin mining or mining in general for some time, or maybe you're not aware of this, we're coming into the summer months, right? So the weather's getting hotter. There's a lot of mining that goes on in the United States, specifically in Texas. And when the weather gets warm, the miners don't operate as well. More start breaking as well. So hash rate is, predicted to drop over the summer months. Now we are in a bull cycle. So the counter to that is more deployment, right? So we do know miners are deploying more. So the current hash rate, the current miners that are on the network will start to see drop off hash rate, right? The question will be, does the new miner deployment compensate for that? Right? So that's kind of what we'll have to wait and see. But typically hash rate goes down in the summer months, right? It used to be different, right? When it was in China, it was during the rainy months or the rainy seasons. So it has changed. It could change in the past depending on where geographically Bitcoin mining moves to, right? Network difficulty is up by 4.38%. So from a mining perspective, things are just getting more and more difficult. And that includes, I think from a whole mining perspective, things get a little bit easier. I think things have been looking really, really good from a GPU and CPU mining perspective. So we'll talk about that here in a little bit. We'll save this gaming article for the end. And let's get into everybody's favorite topic. I'm going to tie it to crypto. I'm going to do my best, right? So, we had a crazy election cycle, and Trump has become president, and a lot of the early promises sounded really, really good for crypto. I think there were some snafus as far as Trump token. At the end of the day, though, that probably means lightening regulation surrounding cryptocurrency, which I saw as a net positive. We have gotten some really good policies surrounding cryptocurrency. Trump was elected. Musk came in as well, at the end of the election to help push him over the line, win the election. And then Musk went to work and created Doge, the Department of Government Efficiency, and recently left a couple weeks ago. And everybody was like super excited about this. I think even including me. Obviously, you want to vote for reducing government spending, especially as a libertarian. So from that perspective, awesome. Now, some crazy stuff happened, and I guess essentially everybody knows this tweet, but it has been deleted. Musk on June 5th, so a few days ago, tweeted, "Time to drop the really big bomb. Real Donald Trump is in the Epstein files. That is the real reason they have not been made public. Have a nice day, DJT." So we're seeing a feud between Donald Trump and Elon Musk surrounding the Big Beautiful Bill. For those that are not in the know, the Big Beautiful Bill is Donald Trump's claim to fame, the greatest work of his administration, and it's going to implement a lot of different things. And so we'll talk about a couple of those here in just a second. But this kind of got a little out of hand. The markets reacted extremely negatively to this. So if we look at Bitcoin, right? And this is important too, because Bitcoin did react to this, right? This is June 5th when that tweet went out. Bitcoin almost dropped back below $100,000, right? Which is pretty wild. Now, if you want, I'll give you my spiel real quick. My 2 cents on the whole, is Donald Trump in the Epstein files? Hell yeah, he is. Of course he is. But so is every other probably politician in the United States. I don't know that for sure. Allegedly. Let me say allegedly, so is every other politician in the United States. And the question would be, to what extent is he in the files, right? We already know he partied with him. I would assume some sort of knowledge between, Trump and Epstein. I'd be hard pressed to say you don't know someone that well. You know someone that well and don't know what they're up to. Would be a little ridiculous to me, I think. I don't, but I'm more of a tinfoil hat guy, The question would be, did he go to the island? I would say probably, Then the question would be, did he do anything wrong? I would say, probably. Maybe like Peter Schiff wrong, Like, I'm not saying it wasn't a crime. I'm just saying it's not pedophilia. When I was in college, I had sex with underage girls. That doesn't make me a pedophile. That kind of That kind of thinking. You know what I mean? That kind of. So first of all, yes, it does mean you're a pedophile, but I understand the logic. So the logic here is if you're, and it depends, right? So the argument is if you're 18, 19, having sex with a 16 or 17-year-old girl or boy is, in age of consent by state, and then there's time, age between and so on. Maybe that's what he's talking about, but pretty bad tweet here as far as that goes. I think as you get older, it gets worse. Is there a possibility of DJT and 17 on the island or DJT and 16 on the island? Who knows? Allegedly, it's obvious that what Musk was trying to allude to here is that it is bad, that he has done something incriminating. It got really weird for me when then Kash Patel, and you guys tell me, just like a little, I'm processing all this stuff, I think, just as it goes. And we're going to talk about why it matters for crypto too. But I found it really weird that Kash Patel then was on Rogan at that time as well, refused to comment on this tweet, and then also says that there's no video evidence when the Attorney General, Pam Bondi, says there's thousands of hours of video evidence. So I'm just saying, I don't really believe any of the BS coming from anyone. Also, I don't even think Elon Musk is clean, because there's clearly some sort of relation between him, or was some sort of relation between him and Ghislaine Maxwell. We could argue over it for days, but at the end of the day, all these people know each other, right? All of these people know each other. They all run in the same circles. The extent of their relationship has to be proven beyond a shadow of a doubt. I get that. It is what it is. I tend to be on the little bit more of the cynical side of this is just, here, all right. Let's just say Musk and Trump are either both guilty or both innocent, right? It doesn't matter. What matters is that these tweets go out, the markets dump, right? These tweets go out, the market dumps, and then Eric Trump on June 6th announces some more purchases from the World Liberty Financial. And I think this is just, it's crazy to me that it feels like to me there's market manipulation by the Trump administration of crypto. That's what it feels like to me. And it feels like Musk is in on it. And look, I don't know. I'm saying allegedly, and I feel like it. And it kind of pisses me off a little bit, right? It kind of pisses me off. And it gets this isn't even the worst part, right? From a crypto perspective, we're kind of used to stuff like this. Also, if you want to, apparently you can look at the World Liberty Financial Holdings. I hate that name. But you can look at the purchases. I don't know that they're all on here. There's questions of at what point do we get told that they're on here? What's on chain? Is there stuff off chain? We know there's stuff off chain. What's going on between all of it? So I don't even know if this stuff is fully accurate or anything along those lines. All I can tell you is that this happens, then this happens, and then this happens. And you can't ever be sure, but if there's enough points on the graph, which there's a lot of points on the graph now, it starts to feel like you can make, you know, I guess that meme from It's Always Sunny in Philadelphia just seems super convenient. Yeah, Zach, it seems super convenient that they got a lot of purchases. There's some other announcements from World Liberty Financial purchases as well. You can obviously follow them and follow the Trumps and all that. Sometimes I wonder if there's not an intentional crushing of the United States economy, and everybody's getting out and moving into crypto, including, and the Trump administration's all behind it and is playing that game as well. Sometimes I wonder if that's what's happening, right? But then things get really weird. So, do you guys remember some of the, dude, this is crazy to me. So historically, here's what I've noted. This is something I've been struggling with for quite some time. So over the last administration with Biden, you know, I have acquaintances, family members, whatever, on both sides of the political aisle. And I always found it interesting that you know, at the very far breaches of them, they kind of agree on a few things. One of the things that I thought was really interesting, though, is like liberals have been, you know, anti-Monsanto. These are some of the policies I used to agree with, like, liberals on, right? Anti-Monsanto, anti-vaccine, you could call it, or vaccine hesitancy, or well, however you want to call it, right? Like, suspicious of big pharma. I think that's the best way to put it. Suspicious, like liberals are traditionally suspicious of big pharma, big corporations, big food, you know, all that sort of stuff. You know, make sure the right ingredients are in there, do this, make sure you're not putting bad ingredients in anything we consume, whether it's a vaccine, a food, or whatever. And then the last administration comes in and they completely flip. Okay? So they completely flip their perspective. Now all of a sudden, they're pro-vaccine no matter what, full stop, which made no sense. Like, I'm not saying any way on the vaccine there, to be clear for YouTube. What I'm saying is I see an ideological shift that makes no logical sense from people in that party, right? And I say that because I'm seeing it on the right now. Okay. And I know I'm going to piss a lot of people off, but what conservatives used to fight for that I also agree with, right? So I agree with the transparency of what's being put in in products that we consume that is now flipped on the liberal side. On the conservative side, I always believed in small government, right? Especially small federal government, okay? And the right to privacy and etc. And so all this stuff is going down with Trump and Musk. And if you recall, look, here's the deal. Musk and Trump, one of the biggest, and I don't know, one of the biggest things that they always like to talk about was the discrepancy between the databases between like the IRS and the Department of Homeland Security, right? So these they start putting these seeds in your brain. They're like, there's a database issue and they have a hard time talking to each other. So hear us out. So hear me out, brother. What we should do, the party that is anti-big government and centralization of government says what we should do is consolidate our databases and create a centralized database of all American citizens. And not only that, the largest donator to the vice president's campaign, we're going to use his company. We're going to use his company. And since you are just a blind Trump supporter, you'll support it no matter what. Right. Yeah. What is going on? So if you guys haven't heard, there's Palantir is going to apparently, this is still in talks. We'll have to see where it goes. To create a vast federal data platform tying together millions of Americans' private records and stock jumps. I use the India Times because I don't even know where to find a really good synopsis of this without having an ideological slant on it. But we're just going to have to go into it, right? Palantir Technologies is back in the spotlight after securing a major federal contract. So there is a contract here that could reshape how the U.S. government uses data. Under the new agreement backed by the Trump administration, Palantir will build a vast centralized data platform that connects sensitive records from across key agencies, including the IRS, Social Security, immigration databases, and more. And of course, this is the way they're going to sell it to you. As a conservative, they're going to say, well, this is going to help get rid of all of the illegal immigrants. And look, I think if you're here illegally, especially if you're committing crime, you should be deported. But don't fearmonger me to take away my privacy and my freedoms. Don't do it. Because I see it and I don't like it. Okay? Like, there's a huge difference between you don't have to, I get it. There's always a balance between security and freedom. That's something that we're always balancing out, right? That is just something that we will never perfectly balance, and I understand that. But once it goes into the realm of intentionally putting fear into the public, like the left did with the vaccine and the right is doing with immigration, to take away rights that we previously held, that is when I have an issue. Okay? And there's more to this, right? It's so crazy. We'll go through the article, okay? So it's powered by Palantir's Gotham software, which this, if you wanted to talk about dystopian advertising, dear Lord, have you guys looked at their Gotham Europa crap? It implements, so here's the page for you guys that are just listening, but it implements machine learning for prediction. And it also is powered by AI as well. So we will have a database system of the American public that utilizes both machine learning and AI to predict behavior effectively. Okay. It's designed to analyze behavioral patterns in real time, flag potential threats, and support decisions around public safety and fraud detection. The stock market liked what it saw. Of course it did, because that's all we care about is how much the stock market is going up. Even though anybody under the age of 35 has no fucking stock. But, you know, okay. It is what it is, right? And Palantir shares jumped 5.38% after the announcement and are now trading over 150% higher compared to post-election 2024 levels. But behind the stock surge, there's a deeper story about privacy, AI surveillance, and what it means when one tech firm gets the keys to America's data. Palantir isn't just improving old databases, it's building what some experts are calling the most expansive civilian surveillance infrastructure in U.S. history. Instead of scattered files and spreadsheets, the platform will use real-time data integration and artificial intelligence to profile behavior, detect fraud, and identify individuals or patterns deemed risky by the system. At the core of the project is Palantir's Gotham software, already used by defense and intelligence agencies. Gotham will now be used on the domestic front. It doesn't just track information, it makes judgments. It could influence everything from how benefits are distributed to who gets flagged for closer scrutiny by the law enforcement or immigration officers. I'm not comfortable with it. Yeah, it is. It's very Minority Reporty, right? And maybe they do just make these movies to like kind of freak you out, but also at the same time put that little seed, plant that seed in your head of like, this is coming. You know, it is what it is. You know, and the thing is like, I grew up in a conservative household, very conservative household. I was homeschooled. Grew up in Texas. And those same people I grew up with, where it was very common to hear anti-Fed rhetoric, you know, surrounding things like Ruby Ridge and Waco and etc. Those same people are now defending a centralized database system with AI predictors in it that will monitor the citizens. And I don't understand why we keep wholeheartedly backing one party with everything they do without putting anything into question. And the other thing that gets scary is in the big beautiful bill, which I hope it gets removed, but we'll have to see, they put a clause in there that says states will be unable to regulate against AI. And then I listened to JD Vance on Theo Vaughn, and JD Vance said in regard to this, the dumbest shit ever, but he said that was in particular to, you know, stop California from using it to censor speech or whatever. But okay, look, I'm a states' rights guy. And we're already seeing it right now. It functions as intended. California puts crazy laws in place. People leave California and come to Texas. If people want to be gay and do weed and mushrooms, they move up to Washington. Okay, everybody can move to a state with policies that they agree with, which is the way it was supposed to function in the first place. So you can tell me, well, we're trying, as soon as a government official says, we're trying to prevent a state from doing something we don't agree with, I stop supporting that politician. Anytime a politician tells me that they want to stop the state from, and I don't care if I agree or disagree with that state's policies, what I have a problem with is when the federal government tries to dictate what a state does. But I also don't believe that that is the purpose. It seems awfully ironic to me that you would put that policy to prevent states from regulating AI in at the same time that you're deploying this database. Does that make sense? And no, there's no updates for the BC 250. Well, I mean, I've done a lot, but that's all on locals. If you want to go to locals, there's stuff on locals about the BC 250. Nothing great, though. I wish people at least would stick by their... I wish people would at least maintain their scruples when it comes to stuff like this. Like, I feel crazy because I bounce between, I don't really care about party affiliation, like at all. Like, I'm just not that type of person. I care about what's happening though. And I don't think that this is healthy. And it is a little scary. It's a little creepy. Life will move on. We'll see where it goes from here. But it's also just a shocker that it's coming from the Trump administration, right? As far as the big, beautiful bill, I am totally happy with no tax on tips. We've talked about that before. Some of the crypto policies, the deregulation of crypto has been fantastic. I think we need to inject the economy with like lightened taxes. I think the tax cuts are great, but there's just creepy stuff that sneaks into these bills. And then there's this obfuscation of it. And so I think at the end of the day, and I wrote this, I think, on Twitter. I'll see, maybe I can read it because I think I articulated it best on Twitter to sum this stuff up. Yeah. I said the Trump and Musk battle was a distraction from the Trump team proposing the Palantir surveillance system and giving Peter Thiel a massive contract. They have taken every power given to them by the Patriot Act to invade our privacy and make us slaves. Compound that with the massive crypto buy from Trump's family's World Liberty Fund, and I have to call market manipulation as a secondary incentive, right? And that's how I feel about it all. Some people take it too far. I think Andrew took it a little too far here, but love you, bud. Love you, Andrew. But I'm not going to say who it is. It's all right. And Peter Schiff, dude, if you wanted to be, it's crazy. I still can't believe this tweet went out, dude. But if you wanted to discredit yourself even more, post this. You know? You know. Let's talk about, you guys want to do a coin review? I might need to get water or another coffee. If you want to give me a second. Oh. So coming up, we're going to take a look at a new coin that came out 9 days ago called Vulcan, and it is Random X. Let me get a coffee. Kitty cup. Ah. All right. Hope you guys are doing good. Sorry for the extended break. I did a bio and then that. So I like to go browse at mining pool stats. and I found a project called Vulcan. And so I figured we would talk about it today. The difficulty is definitely down. Here on Mining Pool Stats, it shows that it has 2.15 mega hash per second on the network, with crypto hash.top being at the top there. And that does mean right now it is definitely at risk for 51% attack, with that pool having over 81% of the hash rate, unfortunately. But that's pretty common with new projects like this. And so let's do a WTF is it. Vulcan Chain is a privacy-oriented proof-of-work blockchain that aims to merge privacy, payment solutions, and scalability adapted to emerging trends and regulations. The code base derives from Monero's code, making Vulcan transactions private and untraceable with the help of ring signatures and decoy addresses. Now, a lot of this stuff has been, pretty popularized as far as like typically whenever we read an introduction and do a WTF is on a coin, it's like, oh, this again, that again. You know what we haven't really been hearing a lot about, and I appreciate it here, is, privacy. And I think seeing this focus is a nice change of pace. Merging privacy, and payment solutions with scalability is awesome. So it goes on to say what makes it unique is that it has an ecosystem including Vector Swap, so Vector Wallet, and its own over-collateralized stable coin. So it has a stable coin USDV planned to launch starting 2025 quarter 3, backed by a team of highly experienced developers in the decentralized finance space. Vector Swap is planned to act as a bridge between private and non-private blockchains. That would be really enticing. Subsequently, enabling USDV minting, burning, and payments on the ERC20 and BSC20 blockchains. USDV does not inherit the untraceable properties of Vulcan, however, so by default on smart contract capable blockchains, but the Vector wallet offers an option to anonymize transactions to a certain degree using an output mixing mechanism. So mixers obviously are used to obfuscate where you're sending funds on a public blockchain. This feature allows semi-private peer-to-peer transactions while remaining compliant with regulations. We'll have to see where that goes in the future. Luckily, we're deregulating a lot of crypto right now. More details you can find in the white paper, which they have linked. And so we'll take a look at that in a little bit. But the important thing is tokenomics, because this is where, developers get sneaky all the time. So tokenomics is a total supply of 104.4 million VUK, plus tail emissions of 2.8 VUK per block. So it's inflationary. This means that it sounds like there will always be a block reward, which I think, honestly, I'm starting to change my mind on the way this works. So I used to think always like Bitcoin's the way to go, supply cap every blockchain. I'm not so sure. It's clearly not working, right? It's clearly gets to a point to where that idea turns into over 90% mined and everybody's holding, right? And we see that with both, Caspa and Bitcoin. So it brings into question, like, how do you incentivize miners to continue to provide security to the network when the cost to secure the network outweighs the benefit, right? Which is like this big question that I think we'll always have. And one of the ways you could do that is, I suppose, this tail emissions of 2.8 per block, right? So at all times, miners have some sort of incentive to continue to mine, which may be the best way to do it. I don't know. I don't actually know. But when I think about it, I'm like, well, that's a big deal. You need to incentivize people to provide security, right? So I kind of like that idea. The block time's 120 seconds, pretty, slow these days, I would say, but fast for a Monero fork. 12.95 million VUK is the dev team allocation. Now, you guys know I have problems with dev allocations. I don't like it. Here's the problem, okay? I can actually break this down very, very simply for you. So how many of you guys have been like keeping up with like Twitch and live streaming in general over the past, I don't know, decade or couple decades, right? Do you guys remember Mixer? And then when all of the influencer deals started coming out, and they were paying influencers like millions of dollars to be exclusive to certain platforms. Do you guys remember that? Like, one of the interesting things is there were a lot of big streamers that went exclusive, got the contract, and then just stopped streaming because you gave them the retirement up front, right? And so Kick.com has actually changed their policy now to where they are incentivizing you by paying you more than Twitch, not making you go exclusive, but also not giving you a big fat bill up front, right? So they don't give you $1 million up front to join the platform or something. All they do is they say, okay, we're going to pay you for what you do. We're going to pay you for the work. And that is why, Kick now is 25% of live streamer viewership. By the way, we're on kick.com/blindrun right now as well. And streamers, stay incentivized to continue to stream. So let's translate that over to blockchain development. Okay. If you give a dev team an allocation up front, and then that gets launched onto an exchange, and that allocation is retirement money, which in a lot of cases it is turned into, the developer loses their incentive to maintain the network and to continue to develop. That's my argument against dev team allocations, okay? And I think that we've seen that happen over and over and over again. More, to be fair, less on the proof of work side and more on the proof of stake side, but it does impact proof of work as well. So I think when there were things people decided to try to do to change that, which was unlock times, right? Where it would be like locked for a year and then 3 years, but you still have the same problem, right? You still end up, and I don't know if it should be a portion of the block reward if you're going to do it as best. I still think if you believe in the crypto that you're building, that you would mine it yourself. I still think that's the way it should be. Personally, I believe in proof of work. If you're a developer, mine yourself and then benefit off of it that way. But I understand the perspective on the other side. I'm just giving the counter argument of like, unfortunately, typically a dev team allocation signals the departure of the dev team at a future date when the price is X amount. It just does, right? Now, in this particular case, it says reduced by 5 million VOOC after staking as funding for a staking pool. So there's apparently going to be staking here, I assume for liquidity of the vector swap, which would make sense, but I don't know exactly yet. A 40% reduction in introduction of 6.5% block reward mining fee as long-term incentive instead of lump sum team holding. So actually they're kind of modifying it in a way that I agree with, right? So this is kind of fun. So they're doing what I talked about here, which is it's going to be a portion of the block reward over time, right? And so I think that if you have a portion of the block reward over time, you incentivize the developers to stick around and continue to develop. So I think this is better than obviously a lump sum up front, which is what they're saying they're avoiding. I think, but I still think, it depends on how much upfront they get and what the price goes to. Because the fact of the matter is, you can only make so many people millionaires in crypto before they decide to realize it in fiat. I will say that over and over again. You can lie through your teeth as much as you want and say you believe in crypto as much as you want, but there is a price that you will sell all your crypto for, and people will do it. And the fact is, it's a PvP fucking game. If you are in a market and you think, oh, everybody's going to hold, no, assume everyone is lying and it's the first to sell that's going to win and everybody else is going to get wrecked. That's just the way it is. That's the reality of this game. And to pretend that that's not the game is a lie. And you're lying to yourself and you're lying to everybody else. And it's just not healthy, man. It's not healthy. They do have a treasury team wallet that you can look at for transparency. I mean, you could look at it on the Block Explorer as well, but I guess that's nice that you can track that there. The algorithm is random X proof of work. So, I mean, we do have potential ASICs, the X5, that can go onto that particular network, unfortunately. But it still does perform quite well on CPUs as far as random X is concerned. We'll have to see if they modify that algorithm in the future. I would propose that they do. I would like to kick those X5s off. That's just me. The emission curve. So it says flatter emission curve compared to Monero, reducing initial inflation and aiding initial distribution. Transfers of over 15,000 VOOC from a team wallet or limit set must be voted on by the community. I think you really got to go to miner voting. That's what I think. Unfortunately, you can't do, I think early on in a project like this on an algorithm that has ASICs available to it, you can't do that. But I would prefer either node or miner voting. And so really what I think that comes down to, it's node voting, right? You release the patch, the proposal, and then you let nodes implement that proposal, and then wherever the majority of the hash rate goes, longest chain wins. I think it's that simple. I think voting in Discord can be manipulated, and community voting in general can be manipulated. I don't think that that's the way to run a decentralized blockchain. I think it's stupid. I think it's naive, and I think to do so is ill-fated. It just is. At the end of the day, it's got to be node and hash power. That's really what you got to aim for. If you're in their particular situation with random X and having the X5s potentially going onto it, you're going to need to fork the algorithm first and put it into a place where people have equal voting power, unless you want to be run by X5 farms, and then, okay, you let them vote how they want, right? It just is what it is, right? So their roadmap is Vulcan Chain launch, website revamp, and Explorer launch in Q3 and Q4 of 2024, which we're at now. And then 2025, Q1 to Q2, first listing, Vector Web Wallet, marketing, staking, implementation, Vector Swap DEX launch, and additional listings. That's kind of where we're at now. 2025 Q2 to Q4, which we're coming up on, will be the USDV launch on BSC20 protocol and on ERC20, and the Vector USDV integration. It has mining instructions on the GitHub, so you guys can go check that out. I will link this Bitcoin talk in chat. As far as the website, it's a pretty clean website. I'm really getting kind of sick of these recursive though, because they use so much memory. And when you're trying to live stream, it's like, can we stop doing this? Because I got 30 freaking tabs in some memory sucking BS fucking template you got off of who knows where, Squarespace or whatever. It's just getting annoying. Make them easier. Look, the best projects have been simple text-based HTML. Just do that. Make it look clean. All this crap. I can't review these things. It's just annoying. It gets all soupy. I hate it. That's just me complaining. We'll stop complaining here. Looks like the Vector wallet. Let's see if the Vector wallet's up. Yep. Vector wallet's up. So you can do that. So web wallet is here. Let's see if they got some nodes there. Let's see if the app is up. Clicking launch app doesn't do anything right now, so I don't know if they have that up right now. Light paper. Oh, let's go back here. So that's the white paper, and then let's check the GitHub. And we'll look at code changes. There were code changes last month on workflows, the SRC, and on the README. README doesn't really mean much. And some tests going on as well. What would be interesting, was this straight forked from let's click. Wonder if we can search. Okay. So there are still some references to XMR in the code, it looks like. So they need to clean up some of those at the end of the day. And they got releases here for the node. They have Windows release and a Linux release, it looks like. So if you're interested in that, and then obviously any XMR miner will work for it for solo mining. And then obviously you can go to mining pool stats and just hit the pool if you want. Looks like we're ready to go. Pretty easy. I trust everybody that watches my channel knows how to start mining new tokens pretty quickly. So I think we're gonna wrap it up there. I don't think that we need to go over, you know, the entire white paper. We got the keys that I think are relevant. At the end of the day, I would say from a dev fund perspective, this is probably done the best way that I've seen. I like seeing, you know, the promotion of security and privacy. I think that's good. I don't like seeing references to XMR in the current code, meaning we aren't seeing fully cleaned up code yet. Of course, I'd have to dig into that more. Some of those references are definitely going to have to still be there. So determining which ones have to be there and which ones don't would probably take a little bit of time for me. But at the end of the day, you know, you like to see clean code. That's at least if you're going to fork something, try to do, I don't know, a find and replace with your token ticker everywhere you can. At the very least, right? So let's go ahead and do a reaction. Apparently, CPU, GPU, and FPGA mining is back according to Rabid Mining. So let's go ahead and get into his video and see what this business is about. Let me know and make sure audio is working for you guys too. I think it is. I see it. Here we go.
What's going on, everyone? Welcome, Rabbit here. We are in 2025. Bull run is in motion. It is June, and we're going to check out what is the current state of crypto mining.
This is the worst bull run I've ever experienced, by the way. This is the most miserable bull run I've ever experienced in my life. Just saying.
On GPUs, CPUs, ASICs, maybe some FPGAs. We'll kind of do some quick numbers possibly, but let's take a look at profits. And if you haven't yet, hit that subscribe button, share my videos all around, whether it's Facebook, Twitter, Reddit, it don't matter. We are pushing upwards to 100,000 subscribers. We're about 12,000 away right now, so let's make it happen. All right, guys, and as we can see here, starting off with GPUs, there is something new. I can't sing, I'm horrible at this, but there is a new coin now listed at hashrate.no. Now, it's not new if you're new to the channel. We've been talking about this for a couple weeks now. Recently went to mainnet about, I don't know, a little over 20
Okay, when did this video come out? 4 days ago?
days ago, so just shy of a month.
Because Tari took a shit, didn't it?
SHA-3X, which is overrun by FPGAs at the moment, but it's still profitable on GPUs. There is a fork coming soon that's going to fork the emissions down. Right now it's at 33%. It's going to go down to 25%, but GPUs will have their own algorithm, and we'll talk about it with CPUs and stuff as well, which we have been for the past little bit. But a new coin is here, and it is in fact profitable on all hardware, CPUs, FPGAs, GPUs.
All right, I'll go check out Retro Mics after
insane.
this.
Now the 4090 here is saying cubic. As we know, cubic is is wrong when it comes to calculators. You're actually about 50% less of what this is saying. Now, why is the 4090 not saying this when I do think every GPU should be on XTM if you care about profits, because that is the most profitable coin. The reason Cubic is listed here is because XTM is not on all the GPUs here. So let's just look at XTM and you can see it does not exist. Hashrate.no just hasn't added it to here. So when it comes to GPU mining, at least NVIDIA, I'm not 100% sure on AMD, but NVIDIA GPUs, which is probably the only GPUs we should be mining on these days, AMD's just keep losing support. They fall behind, and no one really supports the hardware anymore in terms of miners and tweaking and so on. So NVIDIA is really our only option when it comes to crypto mining. And if we just scroll on down the list here, we can see, 50, 60s, 40, 60s, 30.
Do you guys think that's true? I feel like I haven't tested the 9070 fully yet. I mean, the 7900 XTX is not that far behind on SHA-3X. It's profitable on KY too. Yeah, I mean, Capal's really holding up AMD still, right? There hasn't been a new algorithm for AMD really, other than fish hash, right? But fish hash is just not profitable. The 7000 series was not a significant improvement over the 6000 series for mining. And that was primarily due to the fact that it kept the same memory design and really focused on improving cores. Whereas, the 50 series did go to GDDR7, which is a significant improvement for efficiency on the memory side of things. Excuse the burp there, but it is disappointing that AMD didn't go GDDR7 with the 9070 or the 90 series. It's really kept it pretty suppressed overall. But they did get more efficient, I thought. It doesn't look like it, though. That could be a support problem, though, not necessarily. Because by and large, the 9070 is like a 6900 with better power numbers, right? Everywhere else.
The 80s, it doesn't matter. CMPs, 100, 210s, XTM, SHA-3X. It's all Tari. We do have the odd 5090 here saying Quai. Again, I'm most likely because this does not have XTM listed under the 5090 yet, but it will be there soon. So yeah, if you have an NVIDIA GPU, you should be mining XTM/Tari because it is the most profitable coin currently and about to get even more profitable depending on the price and when that fork comes. Now, coming in the CPUs, the sad thing is Hashrate.no has their numbers way out to lunch in terms of power consumption. So, usually, you're probably actually more profitable than what it's saying. Now, these are the big bad boy epics, and they're also saying mine epic. They don't have Tari listed here, which is weird. They have it on GPUs now when there's two algorithms, or not two algorithms, but two chains dedicated to CPUs when it comes to Tari, and that is what we have been mining. But it is saying for like 3950Xs and stuff, we're seeing decent profits on Epic, which is Epic Cap.
Yeah, but HBM, we're seeing, so Squirrel Master, the cost to produce HBM is quite a bit higher than GDDR7, and the performance is on par enough that I think you would want to now avoid HBM and move to GDDR7 in most consumer line products, right? So The ones that we would use for mining, I think you would want to go GDDR7, right? And so I think, we're seeing that with the 50 series, right? Like where the 5080 is really trading blows on an efficiency standpoint with the CMP 170 HX, right? Now, HBM3 obviously, yeah, can change that coming down the line. But, you know, those cards are also going to be extremely expensive and hard to get a hold of thanks to AI. It just is.
Which means you can mine 2 coins at once with Epic Cash. So you're actually almost doubling up your profits of what you are seeing here. So we're at probably around 60 cents or so mining Epic on a 3950X plus some other coin, maybe mixing it up.
I'm sure you know
like
it.
Spectre here. So
We got to
that
say
back
it
in
though,
half,
right?
You're half and half on each. So maybe this is 15 cents plus that. So you're maybe about 45 cents, not 60 cents if you kind of get an idea. Actually, that's what this big guy right here. So that don't even count. So cancel that out completely. We'll just kind of come into 3950X here. Does it have, what's Zephyr saying? 20-cent profit. So add 10 cents onto that. So, you know, let's say we're doing about 40-cent profit after power. So that's actually not too bad. It is saying, but this is also saying only 105 watts worth of power on a 3950X. That is not the case. I don't know what, and they're only saying 12.9 kilohash.
Well, that's
their hash rate
software
is low,
readings,
their power
right?
is way low. I don't know what type of settings they're utilizing here, but you know, it's possible. But this is more like 3900X numbers, and our power should be quite a bit higher. But that don't matter because this is not what we care about right now. Tori is the top coin.
So Trade Nickel says they say GPU mining or GPU memory is completely different, but does it have to be? And the answer to that is like obviously no. The most dedicated hardware, like any console, you know, the MacBooks, anything like that is unified memory these days. And if you look at, for example, the BC250 is a great example where you have essentially unified memory and the performance of that memory is on par with the dedicated video memory counterpart GPU, right? In like the 5600. So when we talk about that, like that the answer to that is absolutely not, right? It's not at all. And no, it's not like soldered memory on a laptop. There's unified memory, which is where the memory is shared between the system, the CPU, and the GPU, right? And like I said, like the biggest in mining, the one that I can point to like right away would be like the BC250, right? But you know, MacBooks, all those, like everything will be unified memory at some point because we will probably get rid of dedicated, at least on the consumer side of things. I mean, we're already moving there with like the Nintendo Switch, the Steam Deck, that sort of thing. We will eventually move away from dedicated GPUs on a consumer scale, right?
For CPUs also. All right, so current price of Tari right now is about 5 cents, which is a pretty big drop from where it was upwards to 8 cents, you know, just like a few days ago. But the point here is, how much are we mining? I have been kind of trying to track this right here, and I'm just going to put this right here. Let's zoom in a little bit. There we go. And we're going to adjust all this to 5 cents now. All right, so let's take a look at these numbers. And based on my spreadsheet, this is set up so that it's actually when the GPU split kind of comes here, as SHA-3X is going to be the FPGA and this Kakaru 29 will be GPU ASIC resistant only. So it's going to be split up 4 waves, which means 25% emissions on each. This is the way I have my spreadsheet set up. So when it's all said and done, it's ready. But you are actually getting more, and I have been testing this with my CPUs, and I am indeed getting more coins than what my spreadsheet is telling me. So this is currently you're getting 33% on SHA-3X, 33% of the emissions on Tari only, and 33% on the Tari merge. But this again 2.4 million coins is based on the 25% on each one. As you can see, here's the emissions on each. Anyway, looking at this, and remember, you're getting a little bit more. Here is what the numbers are looking like. On each chain, you're getting about 124,641. You know, a little bit more based on this. I keep pushing that. But here we can see, I don't know the network hash rate because the network seems to be down right now. There's some issue going on. We can see the block explorer
And that's
is not showing
total
anything.
daily
And
emissions.
then it glitched back out here. We can see the pool that I'm using for Tari only. It doesn't have the information. They are having issues with the Tari blockchain right now, which is interesting because it just came out of testnet. So I guess it's kind of expected. Anyway, moving forward here, based on what everything was previously at, 1.8 gigahash online at about 22 kilohash, which is a 7950X here. You get about 30.46 coins per day. That is $1.52 before any type of power cost. Now, when it comes to the Tari merge mining, you'd be getting same parameters, 22 kilohash, 19.58 coins a day. So slightly less because we can see we have quite a bit, 2.8 gigahash online there, last I know of. So you're only getting 19.58 coins, which works out to be 97 cents per day. But you are also merge mining Monero in this case. It's currently at $348, 5.2 gigahash online. You're getting an extra 63 cents here added together. Merge mining is the more profitable way to go right now at $1.61 per 24 hours.
So the thing with the merge mining, and this is just my experience, so I'm sure people will maybe disagree with me, but I think that with that number being so close, doing Tari only would be more advisable because you will have less configuration issues and less crashes and less just problems, right? And I think that there's something to be said for that at the end of the day.
7950X3D. It is using that 12% power, about 43 cents, I think it is. So, you know, the profit is pretty decent. It's over $1 in profit on a single 7950X and a 7950X3D and, 7000 series anyway. But we can see here that merge mining with Monero is the better option. When it first forked here, it was better just to mine Tari, but now I might have to switch over. All right, so as for a little bit of FPGAs on SHA-3 right now, we are seeing that an E300 currently at about 383 watts or so is getting about 7.2 gigahash. That is about 124 coins a day or $6.23. Now, Osprey recently just said that they're going to get even more hash rate soon. A new bitstream is emerging that's updating, and they're going to be doing even better pretty soon. And they're going to do even better once the fork comes, because all the GPUs that are current profitable as well on SHA-3X is going to get forked over to Kuckaroo here. That means the FPGAs will have their own network.
I'm not a fan of the Kuckaroo GPU algorithm as the choice. What about you guys?
Work to themselves without the GPUs, boosting even more profits because that hash rate will drop a bit here, moving over to just the GPU side. But then eventually ASICs will come, and depending on how much larger they are, they could remove FPGAs completely, or maybe they'll kind of coexist, kind of how the GPUs and FPGAs are currently right now. And when it comes to ASIC mining profitability, and if you are looking for any ASIC, be sure to check those links down in the description. It greatly helps out the channel here. But for the most part, it doesn't even look like it's really worth mining on an ASIC right now, especially for the price that these things are. And, the hash rate increases when they release and the probability that drops when it happens. But anyway, the top miners here are obviously Bitcoin miners here, and they're not even released. They were recently announced.
I don't care.
Tari only, that's about $14.67 a day.
You said you weren't talking about ASICs, brother.
Tari with Monero.
I'm skipping it. I can't do it.
On that chain, that's about $15.54 a day. That's before power costs. This does use about 1,350 watts or so. So calculate that based on your power price. But the profitability is pretty damn good. All right, guys, so that pretty much does wrap up this video. Profitability of June of 2025 on a bunch of different hardwares is definitely...
I don't even see it looking that good, really. you know. It is saying XTM on SHA-3X is up. And then I guess we can go look at the price. Maybe it did recover. I know there was the exchange hack in regard to XTM, but XTM's actual chain wasn't affected, right? Well, I don't know. That still looks pretty bad. That's depressing. Yeah, still dropping. It's down to 3 cents now. Profitability looks up, but you know, we're not even over $1 a day for a $4,000 GPU. I mean, like, what are we really talking about here? You know, like a 10-year ROI, like at 8 cents a kilowatt hour, which is like good luck on getting that kilowatt hour at home. So, I mean, mine and hold on your, you know, your gaming rigs or whatever when you're not gaming, but like building out a bunch of rigs, probably not like advisable, really. Well, yeah, I mean, like if you got FPGAs, those FPGA miners, the problem is as soon as you get FPGA and ASICs on the network, their only goal really is to suck as much liquidity out of the network as possible and put it somewhere else, right? And that's just the mining strategy of the FPGAs, because they're at a place in the market where FPGAs are that step between GPUs and ASICs, and there will never be an FPGA only coin. It just really isn't in the cards. And so they're like, an FPGA mining strategy is extract as much liquidity out of the project as you possibly can. Right. And I think that's just the nature of the beast, and that's the way it'll always be. I mean, I have some FPGAs. I know a lot of people that have FPGAs. Red Fox has some FPGA, Snake. I think quite a few people do. So, you know, is what it is at this point. But let me like the video and share it with you guys. Make sure you go give it a like. Do you guys want me to check out that retro Mike's video as well? Oh, let's see if he comes right up. I thought I was subscribed. Anyways, let's hit it. It's my bad. Okay, here. Yeah, let's see.
Over the past 2.5 to 3 weeks, I've been mining Tari with some FPGAs. Today, I'm going to talk about what I've been earning and how it's been going and the ups and downs to it. So,
I'm going to speed it up a little bit.
Tari is a fairly new coin. I believe their mainnet launched about 3 or 4 weeks ago. And there are a couple different algorithms you can run. One of those is SHA-3X, which is a FPGA-friendly algorithm, which we do have bit streams for. So I've been mining this, and I've been selling it multiple times a day. So every time I get a payout, I've been selling it, swapping it, using the Safe Trade Exchange, swapping it USDT, and then from USDT, I'm swapping into some other coins that I want to hold. Typically with FPGA profits, they don't last a long time.
What did I just say? Oh, crap. Okay, listen to this. Sorry, the video wasn't up. So, this is Retro Mike's video on how much he earned for Tari over the past 2 weeks. I want you to listen to what he said here, though, because I just said it.
Over the past 2.5 to 3 weeks, I've been mining Tari with some FPGAs. Today, I'm going to talk about what I've been earning and how it's been going and the ups and downs to it. So, right off the bat, Tari is a fairly new coin. I believe their mainnet launched about 3 or 4 weeks ago. And there are a couple different algorithms you can run. One of those is SHA-3X, which is a FPGA-friendly algorithm, which we do have bit streams for. So I've been mining this, and I've been selling it multiple times a day. So every time I get a payout, I've been selling it, swapping it using the Safe Trade Exchange, swapping it USDT, and then from USDT, I'm swapping into some other coins that I want to hold. Typically with FPGA profits, they don't last a long time. This coin is super new, and
typically with FPGA profits, they don't hold for a long time. Therefore, his strategy is to swap into other coins and sell right away. FPGAs, that is the mining strategy across the board. It just is. And that, I get that that's like detrimental for the networks. And I think that if you are creating a new coin, you should take that into account and really consider the fact that if you look historically at projects, like which projects had the strongest user base on a proof of work, from a proof of work perspective, and the most participation, it's always been GPUs, right? No, because you look at Ethereum, Snake. That's the thing, is like, it depends, right? So it depends. If you have ASIC resistance in place, GPU miners participate within that cryptocurrency, right? If it is FPGAs are the worst offender because they sit in a position where they only have a brief time on any cryptocurrency to mine. Does that make sense? So when it goes like that route, it is true that if GPU miners feel like that network is going to move away from them, their strategy is to mine and sell, right? But if GPU miners are currently in profit, they don't typically move out of the network. They stay within the network if the network has sufficient tools to remain within the network, like Ethereum.
Wasn't sure how well it was going to go, how the price was going to fluctuate. And so I decided I wanted to go ahead and take those profits as I was mining it and swap it into coins that I actually want to hold. At this point, I have zero interest in actually holding Tari, but the profitability was there. So before we talk about the actual profitability, I'm going to talk about the machines that I'm using to mine on. And I'm using a total of 9 FPGA cards. All of them are on the Osprey E300.
Okay, so 3.
So I've got.
So he has 3 E300s basically, with 3 cards in each for 9 total.
A E300 VU35P. It has 3 VU35Ps in it. I have a E300 VU33P. Again, this has 3 VU33P chips in it. And I also have an E300 VU7P. And this has 3 VU7P chips in it. And all of these support the Tari bitstream. So if you hop on over to Osprey's website and you go to the product page and you go to the algorithms tab, you can actually see all the bitstreams that they support. And so we can see on the 7P, this is kind of the bitstream that they support for Tari. So it's 7.2 gigahash if you run it at 600 megahertz at 700 millivolts. And then
I'm curious what that, so let's look over here. Best GPU in the world right now, consumer available, I should say. Almost 2 gigahash at 300 watts for comparison. So this is 7 gigahash a second. What's the wattage?
100 millivolts. And then on the VU33P,
is that per board?
Here, it's 4.2 gigahash.
That's the whole unit.
If you run at 700 megahertz at 700 millivolts.
So that would be. I mean, it sounds.
And on the VU35,
it's competitive card versus card, but it depends on the wattage, right?
We scroll all the way down. They give you a couple different clock options, but the kind of the most common one here was 6.48 gigahash second, and that's if you do 600 megahertz at 700 millivolts. Now, I am not running these specific clocks and these hash rates. I'm running some very specific things. Can we talk about that real quick? So I've got my E300s as well as a couple Bitcoin miners, all on the same 120 volt circuit in my garage.
Okay, so the power's a lot better, right? Yeah.
And so for those purposes, I limit the power usage on each of those systems. So you can see I'm pulling about 1430 watts total. And so my 33P, I have it tuned down to 165 watts. My 35P, I have tuned down to 332 watts. And my 7P, I've tuned down to 327 watts. So let's take a look at the spreadsheet, and then I will talk about kind of the hash.
And so keep in mind, like, one of those boards is running around, what, 100 watts? So maybe triple, rough estimate, triple the efficiency of GPUs on SHA-3X right now?
Rates that I'm achieving with those. So let's go ahead and get rid of this. All right, so what you're looking at here is my actual rewards that hit the exchange every day. So what I did is I'm using Lucky Pool. You can see I've got about 17.56 gigahash real time right now. And my payout threshold, I have set to 100 XTM, which is the minimum for this mining pool. And Tari also has like this 24-hour cooldown period before a block gets unlocked. So what that means is, as I'm mining, I have to wait an additional 24 hours after each block is mined in order to actually get that block credited to my balance, which will then lead to a payout. So what you'll see is my total balance right now on the mining pool is about 400 XTM, but I'm waiting for that cooldown period. So essentially in the past 24 hours, if you kind of look at it this way, give or take, 53 coins, let's say, so the lock balance, we've earned about $10.58 total. And we'll talk back on over to the spreadsheet, and let's talk about each of the payouts, and we're going to start on 521. Now, one thing I do want to mention on this 521 payout, if we hop back on over here, you'll see that my workers, so my E307, which is the VU7P, I didn't connect till the 23rd, and the 33 I didn't connect till the 23rd. On the 21st, I just had the VU35P connected, and so we ran about 2 days of just this miner connected. So the first payout here, kind of really this first payout, this was just with the VU35P. So on that day, with really just 3 FPGA cards, we earned, and this was a little bit of a cumulative payout at the end of that day, but we got 400 XTM, and it was about $13 in that payout. And then here you can kind of see the exchange rates, and I'm not going to go through every single line in the spreadsheet, but you can kind of see how the price.
So diff is just going way up, right?
Once we put on the other cards, we average 2 to.
So like if we look at this, we can tell that
payouts a day.
Like essentially, because as he goes down here, he has more units on and still earning less, right? So, I mean, at the end of the day, oh no, these are okay. Never mind, 21, but these are 2 payouts. 3 payouts. All right, let's
say here you can see
explain it.
On the 23rd, we got 2 payouts. 24th, we had 3. The 25th, we had 3.
Yeah.
The 26th, we had 2. 27th, we had 3. 28th, we had 4. The 29th, we had 2. We had 3 on the 30th. And then 2 on the 31st. 2 on the 1st. 3 on the 2nd. And then 2 on the 3rd. 3 on the 4th. 2 on the 5th. So that's kind of the snapshot here that we're looking at. And you can kind of see how the price has changed. So we started at, when I started mining this, it was about 3.2 cents. And it went down a little bit. So that first week, or really the first couple of days, I would say, it went down to about 2.7 cents. And then we started to see the price just go up. And here you're going to see every time I sold, which was pretty much like twice a day for the most part, that the price kept going up, up, and up. And then a couple times it would flatline throughout the day, but for the most part, it went up. So if we take a look at kind of that low
it's back
point
down
here being
now.
that 2.7 cents on the 25th, and you can see that it kept going up, and it went all the way up here on the 30th. So for those 5 days, the price just kept going up, and it hit about 7.3 cents. And then what happened was the price started dropping and dropping and dropping, and it's been dropping since then. So had I held everything, I would have obviously not made as much because we're now down to 3.8 cents. So, and again, this is a snapshot as of about 3 days ago, is when I took this order history snapshot. So with that in mind, we've earned on average, our average sell price was 4.5 cents a coin. So 0.0455 was the sell price. And what that kind of corresponds with here is over the span of 2 weeks, we've earned $300 worth of Tari that we actually did sell that. So that is realized revenue that we have on that. Now, I have since taken that and swapped that into other coins. But before we talk about that, kind of want to talk about what the breakdown looks like on a daily basis. So that first day, again, this was just with the VU35P, we did about $13. Then once we had the other two machines, we did about $30. But then the next 2 days, we did about $17. And then on the 26th, 27th, 28th, you can see we did about $30 a day on those. And then on the 29th, $17, again, $30 on the 30th. And then $15, $13, $18, $15, $13. And then on the 5th, when I did this final snapshot, you're going to notice that this was a full day, but the payouts were pretty low. And this is because the price has, really dropped, and more hash rate has come on the network. But in addition to this, they've also cut the reward percentage. So they've done some algorithm shifts around with how they allocate the blocks per chain. So they actually have a couple different algorithms on their network. At the beginning, when I was mining, 50% of the rewards were going to the SHA-3X, and now it's like 33%, and soon it's going to be 25%. So that's another big reason why I was selling off a lot of this. Now, if we take a look at this, let's see, scroll up. Our average per day was exactly $20. So still really good running these FPGAs. Now, how much power is that consuming? We already kind of talked about this. So we've got the VU33P is using 165 watts. The 35P is using 330 watts. The 7P is using 327 watts. That is a total of 825 watts for the FPGAs.
Dang,
my electric cost right now is sitting around 5.5 cents. And so my daily power cost is around $1.09 to run all of these, based on how I have them tuned. And I'll hop on over to the Osprey dashboard in a minute.
I remember having a 5.5 cents.
We ended up with a total power cost for those 2 weeks of $15.24, but our revenue was $300. So we actually profited just shy of $285. And here you can see that average profit a day was actually $20.34. So pretty good. And that, that takes into account precise numbers. The table over here, the slow pivot table, has some rounding in it, which is why it's slightly less than the actual numbers over here. But our actual profit, or average profit per day, rather.
I did want to say, like finding places to rent that have utilities included, and rent and go balls to the wall mining until they get tired of utility costs. You can get in a position, I have seen that, by the way, where you can end up in a lawsuit from that, and then you have to pay all that back. So, careful.
As $20.34. And
it depends on like state and a lot of different laws, but you can get in a lot of trouble.
It's looking like, even with everything dropping, it's pretty crazy. Like if you look at the profitability that we're seeing right now. So if I had, let's say 10 cents a kilowatt hour, still profiting $2.72, I could go all the way up to $1 a day.
200 kilowatts
power cost, or $1 a kilowatt hour power cost, and still be profiting $22. So it's pretty crazy right now. Obviously, with some things changing with that network, it's hard to tell what the price is going to do. And so for this reason, and because FPGAs are typically short-lived on chains, I have been selling it daily, swapping it into coins that I'm holding. I haven't sold anything for cash or fiat value, if you will, but swapping into coins that I want to hold. So let's hop on over to the Osprey dashboard here, and we just take a look. So this is my 33P. Let's hop on over to the 35P. So here's the 35P. You can see I'm getting 7.8 gigahash on this. I'm running 650 megahertz on this.
Let's go back
to tank on Tari. It wasn't as advantageous. So right now what you'll see is, I talked about in the spreadsheet that we've got 17.5.
It seems to have crashed really, really hard here recently. So I'm wondering if these are even accurate now with the new reward structure. I assume these are not, none of these are accurate then on hashrate.no at this time anymore. That would be my guess.
5 gigahash. Now keep in mind the Bitstream has a 10% dev fee. So we are going to lose essentially 1.75 effective hash rate. So if we hop on over to the Tari dashboard, you'll kind of see here these little dips here from the dev fee kicking in. But for the most part, so you'll see that we've got 18 gigahash up here, and then, it's dipping down to that 15.5. So we are averaging that 17 for the most part, straight across the board, for our effective hash rate. So you'll see like right now it's in a diffy mode. So it has dipped down to our what it thinks our real-time effective hash rate, 11 gigahash a second is. After a few minutes, this will kick back up, and then we will see a lot higher. You can see that's a.
I don't like that dev fee hash rate. Click on those bit streams. I mean, I get it, but dang, they're crazy.
15-minute average. If we're looking at total here, so 72.26 is total paid out, and I currently have a balance of about 400 XTM. So overall, it's been good. These machines I have, with the exception of the VU7P, I've had the VU35Ps for a couple years now. I've had them for quite a while, and they've done pretty well. I've been super happy with them, and happy to be able to throw them on Tari. I did have them on Waglayla when the Tari Bitstream.
That's what he had them on, Waglayla. Somebody in chat asked earlier what was on it before this.
Released. If Tari profitability tanks, I will probably just throw them back on Waglayla. But for now, super happy. I'm able to accumulate some coins that I want to hold long term. So this has been great for me. Loving the profitability right now on this. This also, I could use this to offset my power to run some GPUs if I want to run more GPUs, more CPUs. And so there's a lot of advantages for me being able to run these bitstreams.
Cool. Here, let me share it. Make sure you guys go give it a like. Make sure you're sub to them too. Oh, in chat. And then let me know if you guys want me to react to anything else or talk about anything else. If not, I might take a break and do some Fortnite. We'll stay streaming though, at least over on Twitch and Kick, I guess. Is Twitch up now or Twitch still down? Let's look. I think Twitch maybe went down. Might have to stop and start the stream at some point. Yeah, well, it's so weird, dude. Lasted for like 5 seconds. It's like live with one viewer, but currently offline. That's so weird. So weird. Huh. Welcome to the stream, Tristan, by the way, over on Kick. Thanks for stopping by. Yeah, we'll probably kick it off. Team Twitch. I can show you guys. Let me make sure I can show it. I did do the... I think I gotta log in. I did it. Yeah, I gotta get my keys. 1 second. But I think I do have it running. No, I plugged the wrong one in. Watch out, moving this cord over here, but don't trip over it. All right, give me a sec. And we'll figure out what we're doing and get more coffee. Fasted today. that'll come up actually. Hold on. If I do bench, where's the other one? Where's the 4K? Boom. Ball in. You can get a picture of that too. One sec. All right, so I think what we're going to do is move over to Kick, but I want to show you guys the hash rates of the BC250 since I flashed it. The big thing to note here, I realize it might be a little bit difficult to see, but the big thing to note is that I cracked the BIOS and set the allocated memory of the GPU to 3 gigabytes, which is what all that's needed for Warthog or the Janus hash. And what that did was essentially reduce the power consumption. And I also am getting really, really good hash rates. This is stock right now, but it's basically 240 mega hash a second. 84 watts in the software. I believe it's like 160 at the wall. Let me double check. Yeah, 160. So 160 at the wall, which dropped like 15, 20 watts, 20 watts, I think it is. So pretty good numbers out of that. Was pretty happy with it. I did tweet about it. If you want the BIOS and all of that, most of y'all should already be there, but if you also want to support me, it's over at sonofatech.locals.com. So you can support me over there too. I would appreciate it. I'm probably going to be working the rest of my life, but you know, maybe we can get our dream back at some point. Who knows? It's all good though. I think with medical and everything these days, working is working. Gonna have to do it. You know what I mean? Let's hop over to, I would like to stay on. How many of y'all can transfer over to Kick? Y'all good with that? Let's see if we can do that, because that's going to be the least amount of ads, etc. and working, but I also probably will restart the stream. But let me get that going. Now I'll probably swap over to the Blind Run channel on YouTube maybe. Or switch the stream over. I do want to stop and get Twitch working though. I do want to stop the stream and get Twitch working at some point. There we go. I'm also on Twitter, or X, as Son of a Tech. I stream over there now. So we're multi-streaming. Twitch, Kick, YouTube, X. I will probably be only doing the game and longer form streams on Twitch, Kick, and X. So that'll be that. We'll keep this kind of regulated to the crypto news, etc., just so it's easier for my editor to get the clips that he needs. Because if I go too long, then it's just a lot of work for him, right? So, and a huge shout out to my editor. If you guys, all the money that comes into the YouTube channel, whether that's memberships, ad revenue, tips, all of that is going to the editor. And he just got married. So any support you throw, any donations or anything you throw at Twitch, or at YouTube, goes to the editor. I'd appreciate any support that you give him. That whole check goes to him. Anything, if you want to support me, the best way is over on sonofatech.locals.com, becoming a member over there. Or if you just want to do like one-time donations or get rid of ads on Twitch, you're more than welcome. All the Twitch revenue, all the locals revenue goes to me. So that's kind of how I have it split up right now. I wanted to keep him on full time, so that's why we're doing that. And then I just work my day job to make up for all that. So there you go. That's pretty much how that works. And I'll see you guys next Tuesday. But come on over on Kick. I'll see you guys there. Or Twitch. Either way.